Hey, good morning, everyone, and welcome to the live stream. This is typically a live stream where I have a co host, Daryl, but he couldn't make it this morning. And it's going to be a solo mission for me handling stock analysis discussion on the stock market this morning. Thank you so much for joining. And if you've been on the stream, you know that we are going to talk about stocks. And if you'd like me to take a look at a stock, put it in the chat. Members, that's included with your membership. If you're not a member, consider being a member. I think it comes with good perks. If you don't want to be a member but want to talk about a stock, buy a $5 super chat and we can take a look at that stock. We'll look at stocks fundamentally, we'll look at the businesses, see if they're growing or if they're contracting. Do they have momentum? Are there reasons why this stock would do really well over the next couple of years? We'll also look at the profitability of these businesses. Do they make a lot of money? Do they generate a lot of cash flow? Do they make themselves very desirable? So we'll take a look at that. We'll run valuations and see if those stocks are priced at a premium or at a discount. So thanks so much for joining. And we've got a week that is not overwhelming. Let's say a month ago, with the earnings reports that were coming out, just so many of them all together, that was a little overwhelming. It was hard to keep up. This week, pretty smooth. I think there's a good number of interesting earnings that we can talk about, and there's a couple big ones. Like today, Micron's going to be announcing after the market closes, and you better bet a lot of investors will be looking at Micron. They've had a real incredible rise in their stock price over the last year or so, maybe a year and a half, because memory prices have gone up so much. They're making a lot of money. It's going to be temporary. It's going to be cyclical, but boy, the going is really good for them, and the stock price is really doing well. All right, looking at how the market behaved yesterday, it looks like we did have a couple of solid winners. Google went up 1.75, Amazon 1.63, Tesla up 0.94, Micron was up 4.5%. That looks really good. We'll take a look at Micron just as a preview, see what they got going on over there, and it'll be interesting. Maybe I'll hold off Micron until the market opens, which is in 20 minutes. It'd be interesting to see if it's trading up or down. In addition to Google going up, Apple was up, Palantir was up, Uber was up nicely. Uber signed a deal to bring on one more robotaxi service in Las Vegas onto the Uber platform. It's the robotaxi service that Hyundai owns, and Hyundai wanted to be in the robotaxi business, and we weren't successful in launching their service, but they have the technology, and they want to partner with Uber to launch that technology. Good idea for both sides. I'm sure Hyundai wants to monetize that big investment they had in creating the technology, all the investment that they had in that particular business. They want to monetize it. So going to Uber is a good idea. And Uber wins because here we go. Their network is becoming more bigger, more valuable, and that scale and network power is going to help them establish even a bigger moat, be more an important company in the future. It's encouraging to see that some software stocks are picking up investors. This is a bloody space where a lot of losses have accumulated for investors in the software application space. Looks like the semiconductor material space did well yesterday. And this week's been a good week. Monday, Tuesday combined, good gains. Can't complain about that. They've been pretty good gains. moving on from those spaces, it looks like on the energy side, what was interesting about energy is yesterday energy stocks opened lower and then they rallied higher. I think there was some news that kind of got to the market that there's, additional conflict, and oil prices are going to dictate where the stock market goes. That's just they're high enough to really matter and really affect the economy. If oil prices continue to rise and they just stay at the level they're at, it's going to impact the economy. It's really taking a lot of discretionary income that consumers have away. They have to put it in their gas tanks. Businesses have higher input costs. What happens with oil, let's say you run a business and you have a lot of product delivered to your warehouses or your factories, the logistics companies will have a fuel surcharge, meaning that component, they've agreed on freight rates with you. But during times of high oil prices, they have a variable component, which is a fuel surcharge. And they're able to, in essence, increase their price to deliver products by increasing that surcharge. And that's going to be impacting businesses that are manufacturing products. So those businesses may have to increase their product and service price to whoever is going to be buying their products. That's just what happens with oil and energy. It impacts the supply chains that it gets fed into. Looks like industrials had a mixed day. Healthcare had a very mixed day. Looks like the big pharma players like Lilly had an off day, and some other stocks had a pretty decent day. Diagnostics looks like it had a pretty decent day. All right, so that's what happened yesterday. Looking at what's going to affect the market today, probably the biggest impact is going to be the Federal Reserve is going to meet, and they're going to discuss the changing of interest rates. I believe it's expected they're just going to stay where we're at now. It'd be a surprise if they lowered interest rates. It'd be a shocker if they raised interest rates. I think it's expected, hey, we're not going to either go up or down. We're just going to stay where we're at. And the Federal Reserve will probably use the phrase, we're going to be data dependent. We're seeing that inflation did come in. It was higher than we would like. The core inflation was higher. We also have oil is coming into the picture, and oil prices are affecting gasoline prices and diesel prices. And those gasoline prices are a part of inflation. So oil prices have gone up about 60% since the beginning of the year. That's huge. Gasoline prices are up about $1. I'm going to overgeneralize, but roughly they're up about $1 per gallon across the country. No matter where you're at, I know gasoline prices are different from states like Texas to California to New York or maybe Georgia. The prices are different based on, where they're located in proximity to refineries and the taxes that state will charge on fuel. But in general, people are paying more for that gasoline, and that's going to drive inflation. There's no way around it. It's also going to make the Federal Reserve probably just sit on the current interest rate and wait. We'll see where it goes. We'll see where that goes. Interest rates don't influence me, a whole lot. It makes me aware of the business climate. It also changes the discount rate on stocks, but it's not like I'm, changing my portfolio a whole lot based on interest rates. That's just not what happens. It's almost like weather, whether it's a little a little cooler or a little hotter, whether it's drizzling or raining, it doesn't affect what I'm going to do. If I need to get things done, I get things done. So that's what's happening with the stock market. Now let's take a look at some earnings that are coming up, and then we'll dive into some earnings that have already been released. A couple of interesting ones. They're smaller businesses, but they're really interesting. Jabil is announced this morning. Williams Sonoma, General Mills, HTHT, and Macy's announced, and D Local is going to announce after the close. So we'll leave that one for later. And of course, Micron is going to announce this morning. And I'll save this one for when the market opens. We'll come back to it. But let's take a look at Jabil. Now, these guys, they do engineering, manufacturing, supply chain solutions worldwide. They operate in 3 segments: regulated industries, intelligent infrastructure, and connected living and digital commerce. The company offers electronic hardware and embedded software design services for analog, digital, radio frequency, power sensor, and optical component applications. Creates, develops, connects concepts and specifications that optimize the function, value, and appearance of products for both consumers and manufacturing partners. So I'm not all that familiar with these guys. Here is their business. So it looks like they are in the supply chain for a lot of electronics. They're headquartered in Florida. There we're seeing products being manufactured. There's a circuit boards that are going to be used in products. That is the modern factory. Impressive. So these guys are an engineering company. They're in 25 countries. Okay, cool. All right, so they announced before the market is going to open here in 10 minutes. And their stock's down a bit, but their stock has been really doing well. It's up 93% over the 1 year. Wow. It's up 419% over the 5 year. Impressive. The big move, I mean, we're beginning to compare stock prices against what we had last year, which was the big tariff news caused the stock market to correct like real fast over the course of a month. I think we were down 18%, 19% on the S&P. So we're beginning to get about a year away from that time, and the compares are going to look like this, where, wow, man, the stock really did well over the course of 1 year. It did, because you're comparing to the low point it had in some cases in the last 2-3 years. In this case here, it's looking pretty darn good. So just remember that as you look at your stocks or analyzing a stock, we're beginning to compare it to last year's low point, and it was caused by the whole tariff news. And most stocks recovered fast. It went down over the course of a month. It went up over the course of a month. And if you recall last year, retail investors got it right. They jumped into stocks that looked discounted, participated in the recovery. And institutional investors were probably a little too smart for their own good. They waited to see, hey, is this thing going to be a little more permanent? Is it going to be kind of a bad year for stocks? And they didn't participate immediately in the big run up that happened. So Jabil here They probably went down. Let's see the 5-year, see if so you see this big drop that happened when tariffs were announced, and then it rose. So, but even from this point here, 173 to 262, it's still a very good rise. It just wouldn't be 93%. All right, so these guys are a $27.7 billion market cap, revenues of $31 billion. Analysts think it's a strong buy, but it is priced a little too high. The immediate response from investors that it's down almost 4% after announcing earnings maybe shows that maybe it is a little expensive. So Jabil lifts outlook is profit, revenue rise. Okay, good. So revenue and profit is rising, and they increase their outlook. They made their outlook better. And they're supposed to be an AI darling. I wonder why. I get what they do, but I'm not seeing that they're right at the heart of AI. Okay, so let's take a look at their financials and see how they are performing. They have 19% growth. If we look at the trailing 12 months, the quarter they just announced, they grew by 23%. That's very good. It's not incredible, but it's good. 23% is good. Let's take a look at their profitability and their cash flow. Their cash flow looks good, 1.2 billion. And see this gross margin, 9%. Interesting. So the market's in love with these guys, and I'm not in love with these margins. These margins are like really low. Gross margins 9%. Okay. And like Palantir gross margins are 85, 90%. These guys, they make money the hard way. And their net profit is 2.47. So this is not floating my boat. And the best that I would want to pay for a stock like this would be 20 times free cash flow. And that would be very generous. But that would put them at a pretty good market cap of like 25 billion minus debt. Let's take a look at the debt level. See if they carry any debt. They carry a little bit of net debt, about $2 billion. Not too bad of a balance there. When we look at their forecast, so analysts do think this one's priced a little too high. It's expected we're in the year that's going to finish here August 31st, 2026. And for the year, they're supposed to grow by 10.7%. It sounds like they raised their guidance, so it may be better than 10.7%. And their earnings per share really has expanded. It doubled basically. So I can understand the stock price going up. I'm still not liking the gross margins, the profitability of this business. And that's one of the key factors that I use when I look at a business is just know what you're buying. You know, if you buy a business that has 9% gross margins, just, okay, that's what I'm buying. Versus, hey, Reddit has nearly 90% gross margins, 90, 10 times, you know, the percentage. It's a big difference. When Reddit sells $100 million of advertising space on Reddit, they get to keep $90 million in gross profit. Whereas these guys, Jabil, they sell $100 million of revenue. They only get to keep $9 million. A very big difference. As Reddit grows, and they're growing real fast, like 50, 60%, that just means their profitability is growing real fast. So I'm not going to give that up. It's going to be, that's a key piece to my methodology. I want to know what I'm buying. I'd prefer to buy high margin businesses. I'd prefer to buy high growth businesses, high cash generating businesses that have very good balance sheets. The reason for it is when you look at the most valuable companies on the stock market, they all consistently have those attributes. So when I go to a smaller business like a JBill or a Reddit, um, I want to look for those characteristics because those characteristics are going to lead me to a really good investment. So these guys have a forward P of 22.3. All right. I'll do a quick valuation on these guys. All right. So the market's trading. Oh, wow. The sell off's getting a little spicier. So let's use my valuation terminal here, and it's JBL. And I see the comments, guys. Bear with me. Let me finish my thought here on JBL, and then I'll get back to you. So these guys are growing quite nicely. So I'm going to give them a very good growth rate on cash. The discount rate I'm moving up because I thought interest rates are going to come down this year, but they actually are going to stay higher for longer. And the profitability, I think, is going to increase for these guys. So I'm going to be very generous on the growth rate for earnings per share growth. And I don't want to pay too much for these guys because of their margin profile. They just don't have a big margin. Okay, so the fair value for this business is up here. And it looks like my growth rate on free cash flow, 15%. Do I believe in that number? Yeah, I think so because of the revenue growth. The stock price is down here. And it's showing that the stock is discounted by 20%. Interesting. And the market is selling this stock off. So let's keep digging a little deeper here. I'd like to go even deeper on JBill. JBill is not a stock that I've valued before, but that's not going to be a problem. We can finish that in a few minutes. So when I think about JBill, it's not a semiconductor company. Semiconductor companies like NVIDIA, they have 75% gross margins. So these guys are low margin. So let me think for a second. They do remind me of like a Honeywell. And let me look that up. And I don't have Honeywell in there. But how about... let's go to 3M. We'll go with 3M. That's an industrial stock. And Comfort Systems, Carrier. All right, we'll go with 3M. That'll just be... all I'm going to do is copy the template. And we're going to do a quick valuation for JBill. See if they truly are discounted. It's a stock that's done really well. Just those low profits are what is the fly in the ointment for me. Okay, so we're going to update this on the fly here and create a valuation from start to finish. Then we're going to get to some of these stocks that you guys are asking for. Good to see you guys on the chat. Thanks so much for joining. It looks like the market is open, so we can look at the market as well a little later. Okay, so I'm going to start looking at the data for JBill on a screen that you guys can't see. That way I can update the data quickly. And the free cash flow is $1,275 million. I want to grow that number. and I want to grow it by give me a second here. Sometimes I could type and talk, and sometimes I cannot. All right, so let's grow this guy. Go by 12%. They are growing nicely. I don't see why they wouldn't continue to grow nicely. And that's going to grow cash flows nicely up to an intrinsic value of 41 billion. Let's take a look at that cash and debt again. And the cash on the balance sheet is 1570, and then the debt is 3450. And shares outstanding. What do those shares outstanding look like? And the shares outstanding 105. That looks correct. So a 33% discount on cash flow. It's a pretty good discount. Okay. And now let's take a look at the earnings per share. The earnings per share for this year is $11.76. And then their year ends August 31st. So I was thinking, should I use this year's or next year's? Let's go with this year's. 18 is fine. Growth rate, 12%. Maybe this is a little light. So 24% discount available on Jabil. And the stock is under some pressure. And my evaluation is looking at the current stock price. So the stock has risen a lot. It's had a very good run overall. And the growth is good. And some characteristics on it look pretty good. This is listed as a technology company. After looking at their business, just high level, I actually think they're more of an industrial, given that they have low margins and they're pretty much integrated into supply chains and so forth. But, tomato, they're in technology. That's fine. But I look at the margins and think, wow, these guys are a lot like an old school industrial stock. All right, so we'll see where Jabil goes. I'm going to put it on the watch list and just add one more stock. I'm nearing 400 stocks on this watch list that have been valued, researched, discussed. And if you want access to this watch list, become an advanced member and you get access to the watch list. If you become a gold member, you get more access, a full terminal, if that's something that you're interested in. And I'm going to go ahead and pop them right here and just put them on the watch list so I could keep track of these guys. If the stock continues to go down and their business continues to get better, might be a stock worth considering. But for now, it's just a good watch stock. And I think I'm going to list it as a watch stock only. This is a small company in the US. And their stock price is $248. We just did a valuation, so we know what the fair price looks like, and that's $327. That'll continue to update automatically. And this has a 24% discount. And here's the watch list. That, again, if you are an advanced member or a gold member, you get access to this watch list, all the research. And how many stocks am I up to here? So I'm up to 382 and counting. So probably get to 400 in a month or two. We'll see. All right. So that was J-Bill. We'll see how they trade. Interesting business. All right. Let me catch up on chat here. Looks like you guys are in the market, in the game. Good to see you, Tomas. How are you, sir? Let's see what the market's doing here on the heat map. Looks a little red out there. Let's look at Weibo Corporation, WB. Absolutely. So we're going to look at WB next. Let's see what that stock's all about. Peyton, good morning. Good to see your name. So oil stocks, as mentioned on videos, I created a video yesterday on oil stocks. So please take a look, Tomas. It's I believe a video you have access to. And I'm going to pop over to my channel just to show you the video that I created. And it's on oil. And I put a lot of time into it. I looked at like 30 companies and it's not coming up quickly. But where is that? Where is that? Anyway, so one more. Here we go. This is the stock, or this is the video. So this video I created, and it is covering, I'll go ahead and spoiler alert. So these are the stocks that I ended up doing analysis on, but I looked at 30 oil stocks, and some of them didn't make it to the video because they just weren't interesting enough. They were a lot like something I ended up covering. But first, there's the video. Second, what am I doing? On down days for the oil stocks, I'm buying because it's my insurance. If oil stocks go up, it's because oil prices are going up. And those stocks are doing really well in my portfolio. But the rest of my portfolio usually goes down when oil prices are going up. So this is my one lever that helps me truly have a method to increase value in my portfolio while everything else is going down in general. So that's what I'm doing. I'm buying more Chevron. I'm buying more Canadian Natural Resources. I'm buying more Oxy. I'm buying more SLB. I'm thinking of buying some EQT because they're pure natural gas. And this is the one lever that is going to work this year. If oil prices go up, it's like not rocket science. It's supply and demand. If this per barrel price goes up, oil companies make more money. It's like, let's think of a product that's easy to get our heads around. If we're going to McDonald's and we're going to get a cheeseburger, right? I haven't been to McDonald's in a while, but I think a cheeseburger is like, I don't know, $3 or $6. I haven't been to McDonald's in a long time. Let's say a cheeseburger is $5. And all of a sudden, the commodity price for cheeseburgers is, cheeseburgers are $10. Well, McDonald's just doubled their revenue, and everything else on the cost perspective stayed the same. So oil companies get really profitable when you have an oil price of $97 per barrel. And if this per barrel price stays here for 2 months, it's going to be a lot of gravy, a lot of profit, a lot of cash going to oil companies. But it's going to hurt the rest of the market. So that's how I'm playing it, Tomas. I'm purposely just adding more oil stocks. How are oil stocks doing? Let's take a peek at my portfolio just briefly here. You can see I put green where on stocks that I'm going to buy. It looks like SBL is down a little bit. That might be worth considering a buy. And I'll look at EQT. But these are stocks that I'm just accumulating because this is the one place where it could be a hedge against the rest of the market. It could be a hedge so that, hey, oil prices are driving all these stock prices down. Like it's nice and red in healthcare today. It's nice and red in consumer discretionary. If financials are in general going down, software's going down, Microsoft's going down. And you see all this red, but look at this green. So this is my hedge. All right. And I know that you asked about PBR, Petrobras, months ago. I hope you own Petrobras because Petrobras, in the video I talked about, that was the number one performer. So I'm hoping you own it, Tomas, because you brought it up a couple months ago. We looked at it. So Arkin, what do I think about Grab Holdings? I'd rather own Uber. And FYI, Uber owns a good percentage of Grab. Thanks for joining. Turk. I apologize if I get these names wrong. The handles usually some users kind of they have really unique handles. So I'm just going to say Turk. Good to see you. Sensora has been struggling for me. I've never seen Sensora as a stock. Interesting. Thanks for weighing in. Mike, good to see you. I appreciate it, Mike. Really appreciate you being one of the original members of the channel and a big contributor on Discord. I appreciate all the messages throughout the month and you attend live streams. Thank you, sir. All right. So you're going to watch that video. Cool. Good to see you, Tomas. So we have the WB on the list. I think that's the only one that I saw in the chat. We looked at the market just briefly. Let me see how, in general, the market's doing. And we are, that doesn't look right. Let's go over here. For some reason, Google Finance has been a little slow, a little behind, and a little inaccurate lately. So the Dow is down. The S&P is opening down. NASDAQ's down. So we had 2 good days, Monday, Tuesday, up days. Looks like Wednesday here, we're operating in the red. And we'll see how that performs for the rest of the day. All right, let's take a look at WB. Weibo. Weibo Corporation, through its subs, operates as a social media platform for people to create, discover, and distribute content in the People's Republic of China. It operates through 2 segments, advertising and marketing services and value-add services. The company offers discovery products to help users discover content on its platform, self-expression products that enable its users to express themselves on its platform, social products to promote social interaction between users. Okay, so these guys are in China and maybe surrounding countries in Asia. Let's see if I am able. All right. Let's see here. So is it going to translate for me? Yeah, it did. Excellent. So it's a social app. All right. And communication services companies like this, they're very profitable if they get a lot of users. And I'm not familiar with these guys, so I don't know if these guys are going to be like a Facebook or like a Reddit, but you have to be able to understand, how strong is their, I guess their user. Is their user base willing to stick to this platform for a long time? Are there reasons why the user base would want to be part of the platform for a long time? I happen to think like Facebook, you're in it for the long haul because your family, your friends are in there, and you're not going to get out because, a lot of your family and friends are doing updates and you want to be part of that. So maybe Weibo has that type of connection and kind of bond with its users so it keeps people coming back. So these guys, I like communication services companies a lot. It's the biggest sector that I own in my portfolio. I own a lot of Google, a lot of Meta. I own Reddit. So let's take a look at Weibo. These guys are tiny compared to Meta. This is 2.23 billion in market cap. Did they announce today? Oh, very good stock to go over. They announced today. It's down 6%. It is down year to date. It is down for the 1 year. It is really down for the 5 year. Jeez. That is not looking good. Look at this dividend. 17%. Jeez, that's a big dividend. Meta doesn't pay 17% dividend. Reddit doesn't pay a dividend at all. All right, strong buy with a big discount according to analysts. All right, let's get into this. Hopefully Stock Analysis has, and this might be the most current, but let me check out the headline, see if there's a headline here. Yeah, it's for Q4. Good. Okay. So we do have that's Guru Focus, Seeking Alpha. There's one that is kind of like the clearest one and it's not listed. So we'll take a look at this one. So this is their earnings call. And I'll go ahead and delete that because there's too many things going on the screen. Okay, so investors are not confident in this business because they had really good growth in 2021. They had good growth in 2018, but other years they just haven't been able to grow. And this is pretty concerning. You lost a lot of revenues, maybe user counts in 2022, 23. 24 was pretty much a flat year, and the most recent performance is okay, but this is communication services. And I would think that for social applications in China, you have more of an organic growth potential. And these guys are just not getting it done. They're small and they're not growing fast enough. If you're going to be small, you got to grow fast, especially in a space where you got giants, right? Like the big giant in this space, you have companies like Baidu, Tencent in Asia, and those guys are big. Alibaba to some extent, although they're not social, they're more like e-commerce. But these guys are tiny and they're just not growing very fast. This is in an industry where we should see good gross profits, which we do, 76% gross profits, profit margin at 26%. So they do make money. Most definitely they make good money. And their free cash flow, where is that line? Did I miss it? Here it is. So it's not giving me the free cash flow for the full year last year, but the year prior was 578. Now, this stock is going to show a discount, but this could be a value trap. It shows really good value. It doesn't have a very high PE ratio, but you see that this is a very important line to me here, this revenue growth. This tells me, do customers really like this business? Do customers of the Weibo social platform, are they like, man, I love this platform. I'm going to spend more time on it. I'm going to tell my friends about it, and so forth. And are advertisers really liking the results they get when they advertise on Weibo? The answer is no. There's not a lot of excitement. There's not a lot of growth. And that's a problem for me because Meta is gigantic and they're growing by like 24%. Reddit is bigger than this. They're growing at 60% top line. And those growth numbers show me that those platforms are really successful in getting user engagement. The advertisers are advertising more because they're getting good return on investment on that marketing investment. So this one here on that top line is very concerning. They're not going to be relevant. They're not going to be an exciting stock. If they can grow like 25%, 50%, now we're talking, and they'd have to do it consistently. So this one here on this top line, I'd be really worried. The other compounding concern is they're way over in China. I don't know if these guys are a good social app. I don't know. I'm in the US. I could tell you if Facebook seems like a good, social app. I could tell you if Reddit seems like a good social app because I use them. I have a little more knowledge and familiarity with those. So this one here is what's going to make me a non-buyer of this stock. Just wouldn't want to put my capital at risk here. The fundamentals look good. This is going to be a discounted stock, but it's just too risky. And the business is not healthy. So we are in the year where they're going to be flat. You see these numbers are terrible. And then the growth is not going to be there. So P ratio, look at this P ratio, really low. This is a value trap. You'll be trapped in a stock that's going to bump along the bottom. Maybe have a good quarter, maybe have a good year from time to time, but over the 5 years, my capital would be trapped. It'd be sitting on a stock that isn't getting its business handled. It's not growing its business. It's not becoming more important, more successful. So I would not buy this stock. It will price at a discount. I assure you that. It'd probably be priced at a valuation of like $5 billion. Let's see how much cash they have. So they have more cash than debt. So add 600 million to, that valuation. Yeah, you can definitely value this stock, but I just don't think this stock's going to go anywhere. So thanks for asking about that, Tomas. It's down 6%. Geez, it's down a lot. So the 1 year it's down, year to date it's down 11.25%. So DJ, good to see you. What would be a good entry point for Figure? All right, let's take a look. So Figure and Figma are two companies that are relatively new, and I get the two confused. So let me make sure I'm thinking about the right company here. Figure Technology, a financial technology company, provides blockchain-based products and solutions in the United States. The company offers a suite of blockchain-based solutions for its marketplaces, including lending, trading, and investing activities. So they're trying to create rails that then other businesses could use to build businesses with or build solutions with. I think this is a new issuance, right? So they IPO'd September 11th, 2025. Since its IPO, it is officially up 33%. Year to date, this one's been under pressure. And let's take a look at. So it had a pretty nice rally beginning in January. And I mean, it really went up quickly. Over the course of 2.5 weeks, it really went up. And ever since then, things have not been as good. So the question that was asked is, what's a good entry point? So let me get my head around these guys, try to answer that question. So here we got some pretty good growth here. Now, one thing before we get fully rolling on Figure is with a new IPO stock, we just don't have as much information in history. So it's just a riskier situation. And we'll have to just be aware of that. Hey, we got to go with a higher discount rate. And the numbers have to clearly spell out that this is a very good opportunity. Or we could always wait, leave our capital outside the game here, wait for these guys to show us that they are really building a business that's going to work. So they are growing 48% growth, looks really good. All right. Free cash flow of 62 million. Gross margins of 100%. That looks pretty good. I guess it could be better. It could be 200%. No, I couldn't. Gross margins of 100%. Pretty impressive. Profit margin 26.49. That looks really good. So these numbers look good. All right. So forecast, we've got 9 analysts covering them. They think there's a pretty good discount available. And based on what analysts, 10 of them are looking at, we are destined to grow 64% in the year that we're operating in. It's very good. Next year, it's going to grow by 21 and then 18. Okay. Its PE ratio is going to drop to 28 and then 21. Okay. All right. Looks good. I think their balance sheet should be good. Balance sheet, yeah. More cash than debt. Very good. Okay, so I think I have a valuation on Figure. Let's take a look at that. Let's start kind of dissecting it. Okay, so here is Figure. It's fairly priced. So what would the question that was asked, what would be a good entry price? So that's what I'm going to try to answer here. And I've been watching Figure because it is an interesting business. Now, I own Coinbase. I've been in Coinbase for some time. I'm glad that I'm in Coinbase. I am not selling my Coinbase stock. I'm actually at times buying more. And Figure is insulated to Bitcoin pricing, but it probably would still be influenced by it because it's part of crypto. And based on the valuation I had back in January, I don't think it's changed. It's fairly priced. So what would be a good entry point is I would want to see at least a 35% discount. So if that was the case, I'd have to see a stock price. And let's do this. I kind of do a little calculation on the side here. So this is the stock price. I'm sorry, this is the value per share. And if the stock price was at $25 per share, that's not getting us there. So I would say $21 per share. That would be a good entry price for me. And that's running with the assumption that their business will continue to do well. Okay. Because I'm using some pretty good growth rates here. Okay. Growth rate between first year and second year, 45%, followed by 30. And then at long-term growth, I'm expecting 5% because they're in a new industry that has massive addressable market. So I'm using some very optimistic growth rates here. Okay. I am using a higher discount rate because they're a small business IPO. A lot of things can happen. I mean, Coinbase is they've been around for a while. They've been public. Coinbase has been public for 4 or 5 years. They've been doing what they've been doing for a while. And the newcomers, they might have really solid businesses, but again, I already own Coinbase. I'm glad I own Coinbase. So the entry price would be about $21 per share for me. When are they going to announce next? So they are going to announce May 1st. So we're going to have to wait till May 1st to get some more information. So that is the answer to your question. I think it looks like Peyton's willing to buy at 30. Guess I'm driving a harder bargain. Yeah, DJ. So my price would be $21, $22 per share. And that could change when they have their earnings. It could change for the better or the worse. The company could come out and say, oops, we just couldn't get as many deals done and we didn't grow as much as we'd like. And the stock will crater. The investors will be like, oh no. Looks like Dwayne is on. Good to see you. How am I feeling about Zeta? Hold or sell due to other opportunities in the current market. Software stocks. And Zeta is an ad tech company, but it's a software stock. Okay. So let me close out some windows there. Clean up my act here. All right. Zeta. So Zeta operates as an omni-channel, data-driven cloud platform that provides enterprises with consumer intelligence, marketing automation software. Okay. And it's listed as a software infrastructure company. They compete against AppLovin. They're an ad tech company. Good business. They've been growing nicely. Year to date, down 12.68. Over the 1 year, it's done fairly okay. 22.8. That's not bad. Over the 5 year, that's not bad either. I think most software stocks have been really sold off. I mean, this was really rocking back here, back in 2024. But it hasn't been that great since. But 23%, that's not bad. And I can tell you that other stocks in software have sold off even worse. So the question is, how am I feeling about Zeta? Zeta is a stock that I follow. I have a valuation on them. It's a small cap. And AppLovin is a stock that I made some money on. I currently don't own AppLovin. I sold them. And these guys, 4.34 billion. Okay. Forward P of 18.8 looks pretty darn rational. Discounted according to analysts. When we look at their growth looks good. They're a $1.3 billion revenue company, growing at roughly 30%. 30% growth is good. All right. And they have good margins. Well, okay margins, 60%. AppLovin has better margins. These guys are at 60. That's still okay. It's good. Profit margin, not profitable. They are somewhat small. Free cash flow, 14%. Looks good. So these numbers are okay. It's like if I'm going to use a grade, I'm going to give them a B. It's not an A, but it's a B. All right. So looking at a forecast, we've got 11 analysts putting in their research saying, what do I think is going to happen with this business? This year, they're supposed to grow nicely, 37.35. So that looks good. And next year, they're going to grow by 16, followed by 14, followed by 10. Okay. Their PE ratio is going to drop. Now, what they, this is long term, right? 2029 growth at 10%. They got to keep growing fast because they're still small. So they got to figure out how to grow faster. I don't like the slowdown from 37 to 16. They got to figure out how to go from 37 to 25, if not 30. Because these slow growers like DocuSign, it's just been just stuck in the mud, not going anywhere. This year's supposed to be pretty good. Let's look at the quarterly real quick. So the quarter we're in is this quarter here, Q1 2026. It's expected they're going to grow by 42%. That's really good. I think this headline is going to create some positive attention. Like, hey, man, these guys are really growing fast. Yeah, they are. So this year is supposed to be really good. This might be a pretty good investment that you got to follow closely because it might be good to get in and get out. Okay, so this year is going to be quite profitable. I think their balance sheet's good. Let's go to my valuation. All right, so these guys are nicely discounted. Look at that discount, 49%. And I'm going to bring this back down to earth a little bit. 8.5% discount rate. That's fine. So how am I feeling about it? I'm feeling like it's a good idea. I could see this really working as a good investment. I don't know that it's going to be a good 5-year hold. It might be a good 1 year, year and a half. But the company's putting up some really strong numbers. And I think it's going to have a good year. The one thing that can hold it back is the software space has been just getting slammed, right? The software space, let's look at the 1 year heat map. It's been pretty darn crummy. These guys are put into software infrastructure. They're more like a software application, but let's take a look at like CRM as an example. See, these stocks have just been getting slammed. And when is this going to end, right? When is the market going to like change the story that, hey, AI is not going to destroy these businesses? And I would say that AI has the ability to disrupt the Zeta business, because the Zeta business is about, creating better marketing, better ways to advertise online. I could see how AI does provide that to customers, right? So I think Zeta is probably going to compete against AI solutions more often than, let's say, Salesforce is going to be competing against some kind of AI vibe created application that is going to try to take customers away. So that's where these guys are at. My feeling on it is I'm not going to buy the stock. I'm not compelled to buy the stock, but I could see that an investor can probably do well with Zeta. And that's assuming that software continues to see some investment in it. And if Zeta hits these numbers that they're supposed to hit, I think this stock's going to perform well. Define your exit strategy. If you're in it to maybe make 25, 30% return and then get out, that'd be a good plan in my book, which is define at what point I'm going to sell and then sell. Because if you stay too long, you may see a stock go up and then come down. You're like, oh, great. I'm back to where I started, maybe even in the negative. I could have sold, 2 months ago and captured a 30%, profit, but I stayed too long. So define your exit strategy on a stock like this, because the long-term forecast is showing that they're going to slow down. So not slow down, but the growth rate isn't going to be as good. And if they become kind of a slower grower, they're not going to be as exciting, right? They're going to go from 37 to 16 to 14 to 10. That's probably going to drive, or that's going to create, kind of a flat consolidation stock price chart. So I want to be in this stock for 6 months, 12 months, 18 months would be stretching it. I put an exit strategy like when I buy the stock, I put the exit strategy. If I'm up 25%, I sell. If I'm up 30%, I sell. That would be my discipline, and then get out once the stock price hits that level. And if it struggles, get out quickly, because software stocks have been completely irrational, nonsensical, completely broken. It's a space that's really struggled, but it has terrific fundamentals. But right now, market doesn't care. It's going to process this story that AI is going to hurt software stocks until it finds enough evidence, enough facts, enough information to say, that story is completely false. Software stocks are good. And then software stocks will rally long term. Or who knows, maybe we do see AI solutions in 2026 that are so impressive that you think to yourself, well, I guess the market was right on those. I have not seen that, by the way. And I am all over AI. I've been using AI a lot. I love AI. I think it's cool. I think it's great. It's helped me. But I also know what these software companies have to offer. And to think that software companies are going to be disrupted over the next 3 years by these AI ideas, I think is way overplayed. Way overplayed. All right. So we are moving. We are doing well. Or excuse me. We're covering a lot of ground. Thanks so much for these stock requests. Dwayne, great to see you. And FYI, total side note. How's the sneaker market? My younger son, he's 21 now, but he was fully into sneakers. I guess about 5 years ago. And man, he had more shoe boxes in his room than you can imagine. It was pretty interesting that he was totally into sneakers. Wonder what the sneaker market looks like today. I know like 5 years ago, it was booming. Jeez. It's like buying options. All right. So the stock market is rolling. We got some red, got a little bit of green. Nvidia's had so it looks like the sneaker market is down like the stock market. Man, what's a sneakerhead to do? Can't make money on sneakers, can't make money on stocks. See money. All right, so we've got Nvidia going higher. Micron, let's take a look at Micron, unless there's a request out there, to see how the fundamentals are looking. Looks like the market really bought up the stock yesterday, and it's a little flatter today, but it's green going into the earnings after the market closes. AMD is up nicely. All right. Not a lot of green. I'm having to really look. And it looks like there's a lot of red in healthcare. It was probably a story or something that came out about how pharmaceutical companies are taking advantage of the consumer or something. But it's down quite a bit today. The healthcare space has not been a consistent performer for the last 3-4 years. It's I'm treating them kind of as guilty until proven innocent, kind of. I'm not going to believe in them until they give me enough evidence to begin to believe in them again. So I do have healthcare in my portfolio. There is some good performers in my portfolio, like CBS has performed well. United Therapeutics is awesome. Love them. But I'm not, loading the boat with healthcare. Looks like industrials, GEV is doing well. Caterpillar. Looks like the aerospace and defense companies are doing well. Looks like oil companies are making more money. So I was interested in EQT. I might need to jump into some EQT today. I am loading the boat on energy stocks. I think it's a good hedge for me. And in the video I pointed Tomas to, I covered FANG, I covered Oxy, EQT, EOG, I covered Exxon, Chevron. I covered a total of 10 stocks. I didn't want to make like a 2-hour video. So I couldn't go 30, but I took those 30 and I kind of picked out, a stock from each area of energy, at least. In some cases, like the fully integrated stocks, like covered Chevron, Shell, Exxon. And Exxon's excellent, by the way. Exxon's performed great year to date, very well run business. It's the biggest market cap in energy. So, what's this real green spot here? So, these are the refiners. Yeah, they're going to do well. Okay, so that's what's happening with the stock market. Let's take a look at the index. And again, my Google Finance, what's going on, Google Finance? Dow Jones down 0.78%, S&P down 0.48%, NASDAQ down 0.44%. All right, so I think we're good on the request. All right, so let's take a look at Micron. See what is going on with that high-flying stock. They do memory. Every computer needs memory, and these servers in the data center, they need memory. Memory and storage, that's what these guys do. They have two big giant competitors out of Korea. I think they're both out of Korea. And one of their competitors is Samsung, and the other one is, I forgot the other competitor, but those are two big competitors. And they've been doing really well because the price of memory has really gone up. There's a scarcity. Everybody wants memory so they can build the servers, build computers, laptops, all kinds of stuff. And there's not enough to go around, so companies like Micron can raise the price. It's up 349%. 5-year, it's up 388. I've covered this stock for years. I like semiconductor stocks. They make good money for my portfolio. And these guys are having an incredible year. They're growing 45%. Now, it's not as incredible as NVIDIA. What's interesting about Micron is compared to NVIDIA, I like NVIDIA a lot more. I like Broadcom more. There's probably a long list of stocks in semiconductor that I like more. I'll explain why. Growth rate. NVIDIA looks better. These guys do not make a ton of money on the gross margin line. This is what I'm going to point to, okay? This is one of their best years on a gross margin level. They're able to raise prices and they have good profit going on. But just 2 years ago, that gross margin was half of that rate. They made 3%. And the year before that, they were actually losing money. And that's because they're in a cyclical, almost a commodity-based business, which is memory. If you have a slowdown, the industry says, we're going to pump the brakes. We have a war going on. So that war could make businesses a little more conservative. Like, hey, we're not going to build that big giant data center right now because it seems like it might be extending our balance sheet way too much. So let's kind of pump the brakes there. And then the Chinese, these really good Korean companies and Samsung and the other companies, HK something, they produce more memory. And then the market is flooded with memory. The price of memory drops. Gross margins go down. Profit goes down. This stock's going to crater. Because these numbers are not awesome. NVIDIA, those numbers are awesome. Broadcom, awesome. There's some awesome looking numbers. AMD is growing faster than this. So that's, that's one thing to consider on Micron. And I have a full valuation. We'll take a look at that in a minute. 30 analysts, they think it's priced too high. And you see here, even in the forecast, it's expected we're going to see this business slow down. We are in the fiscal year that's supposed to end August 28th, 2026. They're basically doubling their revenue. They're going to keep that revenue going into next year, but it's expected that the industry is going to pump the brakes. And as we get closer to this event, I think there's going to be investors that have happy feet in this particular stock. Those happy feet investors will leave before this stock comes down. But let me tip my hat to anybody that owns Micron. You've made a lot of money. Congratulations. You picked the right stock. You nailed it. Good job. The fundamentals to me didn't look as good, so I invested in other stocks. And I did well, but this one here has just been an absolute rock star stock. And when we look at evaluation for Micron, I think it's highly overpriced. So, and you've heard the expression, I'm sure, that, the market could be irrational for a long time. And that's certainly been my experience on certain stories and certain stocks. The market could be irrational, or I could be wrong, and in this case here, market likes Micron. It's been buying it up, and investors have been enjoying the rise in this particular stock. So we'll see how they announce today. And what's been interesting in semiconductor is NVIDIA had phenomenal, like perfect earnings. Like they had phenomenal growth, profit, everything, and their stock sold off like after they announced. Because I think investors were like, yeah, we priced all that in, and now we're going to go ahead and take profits. So we'll see how investors behave on the Micron stock. All right, Shadow Guy, good morning. So I'm complaining about Google Finance, and I've got it. I didn't know I had it that good. HK Hynix is the other memory. Nicely. I'd like to award DJ 5 points for giving me that information. Thank you, sir. SK Hynix and Samsung are their memory competitors out of Korea. And these guys, like the Korean stock market has just been killing it. Like the whole market's up some crazy number. And that's because companies like HK Hynix and others have been just killing it. And I think the Korean market, this is the Hong Kong, Singapore. Which one is the Korean market? So the KOSPI. It's not listed here. See, I'm going to complain about Google Finance again. I own Google Alphabet stock. It's the biggest position, so you better be careful not to badmouth them too much. Well, neither one is having the Korean. Where's the Korean market? Come on, guys. Show Korea a little respect here. So this is the whole index up 126%. That's like the S&P going up 126%. That would be like, wow, man, everybody, if you just owned an ETF for it, you'd be up 126%. And you see that it was kind of in a real long-term drawdown. 26% if you were in this index were the 3.5 years that I'm highlighting there. But man, if you got in at the right time, you'd be very, very happy, up 143%. And the reason for it is these guys are in industries that really matter right now. Example being memory. They have Samsung, HK Hynix. So I've been doing more homework on Asia recently. And I actually created a video for members on China stocks. And I've been using Moomoo, which is one of the brokerages that I use because they're headquartered in Hong Kong, and it gives me better information on Asian stocks than American sources, because I think American sources don't go deep and don't cover stocks that are only traded in Hong Kong or Shanghai, or in this case here, the KOSPI. So I'm going to keep doing homework because I'm seeing these numbers going, geez, man, why didn't I go deeper, broader into Asia? I do have some Asian stocks, but of course it makes me think maybe I don't have enough when I see the numbers that these guys are putting up. So, all right. Interesting. So HK Hynix, I bet you HK Hynix is like killing it. Like their stock's up 1,000%. All right. So the 1 year, they're up 420%. 5 year, up 665. Wow. All right. There's where the money is being made. Guess all the referring back to sneakers, all the sneakerheads moved from buying the latest Jordans or the classic Jordans to buying memory. Rajesh. So what do I think is going to happen this year over the next 3 quarters? I think it's going to be oil is going to be the biggest factor we're dealing with in 2026. So I'm using that as kind of okay, hedge against high oil prices by buying oil companies. And the good news is some spaces like software, it's so sold off, it can't go any lower. You would think, but for all I know, it's going to go lower. And we have for the last 3 months, we've seen financials get hit. Let's take a look at the year to date. So we've seen that financials, some of these stocks have been sold off. We've seen software stocks sold off harshly. Even some of these big caps, Nvidia, Broadcom, Apple, Google, Microsoft, Meta. So these are not bid up. These are actually sold off. Well, that makes me think that for the rest of the year, there may be some value here. Okay, there may be some good opportunity here, but it may take a little while for it to get started. And you see that energy is just killing it, right? All right. So for the next 3 quarters, it's going to be when is this going to start to work? It may take a quarter, may take 2 quarters, but I think it's going to be a great area to make money. Financials. This is already kind of taken its discount, right? And this might be a good place to find some good value, make some money. As mentioned, I'm using this as my hedge. I buy on any kind of down day. I am buying. I'm just leaning into it. In these spaces, it's, pick wisely. I think consumer staples could be a wise investment. It's going to pay you a dividend. But these should be kind of like I was saying on what stock were we covering? Zeta. Define your exit strategy. On consumer staples, that's also the suggestion is define your exit strategy. If you're buying into, as an example, hey, I'm going to wait out this crummy market and I'm going to buy Procter and Gamble. That's fine, but I personally wouldn't stay in Procter and Gamble for 5 years because it's been proven that it's not a wealth creating machine. It's not a long-term appreciating stock. When we look at Procter and Gamble over the 5-year, 15% compounded rate of appreciation. It's terrible. It could do well for the next year, but have an exit plan, which is, hey, I'm going to exit Procter and Gamble or whatever safety stock you've got out there. If the market turns and now we're beginning to go back into growth, or if I make 20% on Procter and Gamble and I sell my stock and get into cash, because cash isn't going to be all that volatile, right? It's going to have almost zero volatility. So that would be another thought that I have. This, like, telecom services have acted as a safety stock. Verizon's been killing it. I covered Verizon 4 months ago, pointed that looked like the best telecom stock out there, and that was a correct statement. Okay. So yeah, I think this year is it's not like 2022, different circumstance, different situation, but let me point out the things that do resemble 2022. High oil prices. We had that in 2022. 2022 was a painful year. S&P went down close to 26%. And some stocks became incredible opportunities. Incredible. Netflix, Meta, just go down the list. Like, man, the prices were so good. Now, we're not anywhere near where we got in 2022, but we have the beginnings of it. We've had, I think, a hard first quarter. And if we stay in this mode of it being hard, especially on some industries, and we keep going at this rate, especially with high oil prices could keep us stuck in the mud here and just trying to muscle through and try to see some gains. So that's where we're going to be. Now, there's two ways to think about it. Short term, it's going to be hard. Got to do our homework, got to do research, got to make good decisions. Long term, you may find some stocks that can make you wealthy. You know, back in 22, I was buying Meta. It was low as it got into like down to $85, $86 a share. Meta's now at $500, $600 per share. That's one example. You could have bought Palantir for nothing. There was just some stocks that, man, if you bought them when the situation was bleak, it was terrible, it was hard, scary, you made a lot of money. And that's going to be the case in 2026. Some of these stocks are going to be so bleak, so the situation's so bad that the stock prices are priced so low that those businesses, if they continue to grow and flourish, once the market realizes it, boom, you're sitting on a 3-4 bagger over the course of a year and a half, 3 years. And that's what I'm looking for here in 2026. It continues to do that. If you go back to the COVID year where you saw stock prices just drop like real fast, it recovered really fast. And those who got out lost a lot of money. Those who leaned in made a lot of money. Go to the Great Recession of 2008, 2009, 2010. Ditto. Those who got out lost big because the recovery was good. And those who leaned in made a lot of money, especially around real estate. And you can keep going back to every, big sell-off. That's going to be the consistent theme is if you do your homework and you buy into the right stocks, you will do great. But in the moment, it's not going to feel great. It's not going to be fun because you see a lot of red. All right. Speaking of red, I'm seeing a lot of red on the 1-day heat map. Look at that. Staples selling off. Why are Staples selling off today? Is it because interest rates are going to stay high? Maybe. This might be a good day to pick up some Staples. Energy is still going up. Looks like semiconductors holding its own. All right. Interesting day. All right, guys. Well, thanks for spending part of your morning with me. Let me wish you a successful week in investing. And I appreciate all the requests and all the questions, comments. Good stuff this morning, everybody. I will be streaming tomorrow evening. So if you're around and would like to get back on a stream and talk about stocks and you're an evening person, check in on my channel. I think I'm going to stream around 3 p.m. Pacific, 6 p.m. Eastern. Check it out if you'd like. And Friday, we will not be streaming on Friday morning. So it's going to be a 4-day stream schedule this week. I streamed on Monday morning. Here we are Wednesday morning. I streamed yesterday in the evening, and I'm going to stream tomorrow in the evening. So that's it, guys. Thanks so much for spending part of your morning with me. And thanks so much to all the members out there. Thanks for coming in, making your request, and for your support. Have a good day, everyone.